UK politics is the hot topic of the week. We will discuss that with Bob Mason of FX Empire in the midweek wrap. Mr. Mason, thank you for joining us for our midweek wrap. It is the middle of the week. What has been released so far?
It was a busy first half of the week for the markets. On the economic calendar, consumer confidence and business confidence out of the Eurozone drew some attention. Confidence in Germany from both businesses and consumers saw some uptick, and also from France, driving consumer confidence northwards for the Eurozone. That's particularly important for the ECB. You know, with the ECB continuing to rely on domestic consumption to fuel support for the economy as manufacturing sector activity continues to contract. From the US, you know, we saw consumer confidence ease slightly, but no alarm bells for the Fed. They're still at relatively high levels supported by labor market conditions. Big data for the week from the US, however, was, the upward revision to GDP numbers for the third quarter, revised up from 1.9% to 2.1%. Core durable goods also impressed, coming in well ahead of forecast, both rising by 0.6%. So those were positive. From the New Zealand dollar side, you've got trade data and retail sales figures that also impressed, supporting the RBNZ's price hold last time around. The data suggests that, there's reason enough for the RBNZ to hold for now. For the Aussie dollar, however, stats were on the weaker side. There were no employment numbers and consumer confidence figures to look for. But obviously last week's employment numbers will be of concern for the RBA coming into next week's monetary policy decision.
It's mostly been good news for the US this week, but how about the UK? The media hasn't really paid so much attention this week.
It was a quiet week for the pound on the economic data front. With no stats out through the first half of the week, focus was on UK politics. General election day is coming up, 12th of December. So with 11 days to go, opinion polls are starting to have a more material influence on the pound. Going into last week, we saw the opinion polls from the weekend provide the pound with support. Boris Johnson saw his lead widen. However, YouGov polls from Wednesday showed the lead narrowing from 17% to 11%, largely coming off the back of an increase in support for Labour. Boris Johnson has not done so well in the live televised debates and the Q&As, and in the last one actually refused to turn up. So, with more debates coming up, one tonight on Friday night and more next week, the pound might get a little bit jittery should Boris Johnson continue to underperform. YouGov polls saw the lead, the margin narrow, and then that led to electoral calculus predicting just a 34-seat majority. That's down from 80 seats, in the week prior. So as election day nears, the polls are getting a little bit tighter as we had expected. Next week and even tonight, Corbyn's come under a little bit of pressure, over anti-Semitism. Boris Johnson will have to be a little bit careful, however, with the Tories being accused of, Islamic phobia. So tonight's poll after the debate will be particularly interesting going into next week and, the final week of, opinion polls going into the election day. So as we mentioned last week, expect the volatility in the pound to pick up a little bit and the opinion polls to narrow. And as we've seen before, Theresa May enjoyed quite a wide margin going into the election day. Boris Johnson could be a little bit hot under the collar should the lead narrow to under less than 10%.
It doesn't appear that anything has changed in the UK over the last week. But how is the Eurozone reacting to this?
Well, UK politics is, gripping the consumer in the UK. Consumer confidence, as I mentioned, in the Eurozone has picked up. Both France and Germany saw improvements, and that contributed to the uptick in the Eurozone numbers. That suggests that, voters and consumers are largely aligned between the UK and the Eurozone, both really seeing Boris Johnson taking number 10 down the street and, Britain leaving the EU in an orderly manner with a deal in place. Ultimately, however, the Eurozone's manufacturing sector continues to contract. And as the new ECB President Lagarde mentioned in her first speech, it's time for governments to loosen the purse strings and provide some fiscal support. Things could really turn upside down the worst case scenario for the Eurozone would be Jeremy Corbyn to sort of take the lead in the opinion polls going into election day, and for Trump to turn his attention to the Eurozone, from a trade perspective, and begin talk of incorporating tariffs on, particularly the auto sector. That's certainly going to have a detrimental impact on consumer confidence and likely lead to a tightening of the purse strings. Really, that's the last thing that the ECB needs, and nor member state governments, who are trying to continue to hold off from increasing spending to support the economy. So for now, it looks like the Eurozone will continue to avoid a recession, and hopefully, as far as the ECB is concerned, Trump doesn't start, pointing his trade war wand at the EU. If that continues and, there's a resolution to the US-China trade war, and the EU and the UK go on their merry ways and, continue to trade without a disorderly Brexit, then, things should stand okay for the euro.
Thank you so much, Mr. Mason, for your time. That was the Midweek Wrap.